Eric Sprott, Rick Rule, Doug Casey, Maren Katusa, and Keith Neumeyer. All shareholders of one new gold stock, making big headlines since its start last April. Acquiring gold for $5 to $10 per ounce in the ground, which is dramatically lower than the $50 to $100 per ounce in the ground other companies have been paying. To learn more about what hard asset investors are calling a mineral bank, visit futuremoneytrends.com/investright.
Hello, everyone, and welcome into Future Money Trends. I'm Kenneth Amaduri, and we got a really interesting interview for everyone today. We have Michael Snyder of the Economic Collapse blog. The website is theeconomiccollapseblog.com. A super genuine guy informing people about the problems that are setting up around the world, what to do, how to prepare, and he's got a new book out which he just published called The Rapture Verdict. So, Michael, without any further ado, thanks for joining me.
Oh, it's a real privilege to be with you. Thank you for having me on the show today.
Well, I want to take a trip around the world here and just talk about the collapse that is happening across the globe. This morning, I read a headline from, was it Market Watch? The IMF cut global growth from 3.5% to 3.2%. Actually, the actual headline was IMF cuts global growth forecast, warns against nationalism. And I think they were talking about Europe when they were saying that. But let's start off in Europe, actually. Give us your thoughts here as to what the collapse looks like and what do you see as the next domino happening in Europe?
Yeah, well, in Europe, some very disturbing things are happening, in particular with the banking system. You know, over in Italy, you've got, and you know, of course, we all know about Greece, and Greece, Europe had such a hard time, you know, coming up with a plan to rescue Greece, and of course, Greece is still mired in economic depression. But just to keep Greece from stable for their financial system to not completely melt down, I mean, it just took months and months, and it's still ongoing. But Greece is only the 44th largest economy on the entire planet. If you go and look at Italy, Italy is the 8th largest economy on the planet. And right now, Italy's going down basically the exact same path as Greece. And in particular, the Italian banking system is a giant mess. You know, at this, you know, they've got the Italian banking system. Basically, they're drowning in NPLs, non-performing loans. And in fact, you know, they've got hundreds of billions worth of euros, about 360 billion euros worth of these non-performing loans, which is equivalent to about a fifth of Italian GDP. I mean, it's just this massive amount of non-performing loans. You know, and so far this year in 2016, Italian banking shares have fallen by close to half in terms of their stock value. So we've got this basically this banking meltdown in Italy, the 8th largest economy on the entire planet. And it's not just one or two banks, but virtually all of the big banks look like they're eventually going to have to be bailed out. And so there was this, you know, a big emergency meeting in Rome on Monday. They're trying to figure out what are we going to do? How are we going to save the banks? Personally, I'm not particularly optimistic, but and of course, it's not just Italy. All over Europe, big banks are getting into trouble. I mean, you even look at, you know, the strongest areas of Europe. You look up in Germany, Deutsche Bank, you know, they announced a massive loss for last year, you know, and just this huge loss that they announced. And, you know, they've had turmoil in the upper management, you know, with the CEOs rolling over and all of that. But basically, and what we've seen with Deutsche Bank is earlier this year, their stock price hit a low that we haven't even seen. That was lower than at any point during the last financial crisis. Then it bounced back up a bit, but now it you know, in recent days it started to head back down, and it is potentially threatening the low that was set once again earlier this year. So basically, you know, in Europe, I would watch the banking system because I'm extremely concerned. And of course, it's not just me. The chairman of France's second largest retail bank just recently told reporters that he said, quote, "I am much more worried than I was in 2009. And he was talking about the banks. And of course, we just saw one of Austria's most prominent banks. A bail-in was announced, and I don't know if I could, for HEDA Asset Resolution AG, but basically this is, on January 1st, 2016, this new bail-in regime went into effect in Europe, in which, if basically a too big to fail bank fails, that they're going to go after, the bondholders, stockholders are going to have to take haircuts, and if that's not enough, they would go after account holders. Basically, they've set up this new regime kind of based on what happened in Cyprus, and so this huge bail-in has been announced for HEDA. And it made a lot of headlines over there in Europe, but that bank needing a bail, and this, I believe this is just the beginning, because there's really trouble signs for banking all over Europe.
Michael, this sort of news would have been something you would have had to find on alternative media websites, not the mainstream, but this collapse is going mainstream. And I'm wondering how the people in Europe are feeling it. Is it known to them to a large degree, or is there still a lot of people living with the normalcy bias and kind of disconnected from what has happened, what is going to happen?
Well, it's not nearly as bad as the United States. Especially if you get areas, in Greece, if you try to tell them everything's fine, well, they'll be like, they laugh at you because they've been like, we've been in an economic depression for years, But here in the United States, because we've seen the stock market's up again today, because the stock market has bounced back to just about where it was before, people are feeling pretty good about things at the moment. They think, maybe the crisis is past. But in many areas of the rest of the world, there's no doubt about what's going on. Even CNN, for example, about a week and a half ago, CNN ran this headline, quote, Brazil, economic collapse worse than feared. So not only are they admitting that there's an economic collapse in Brazil, which is the 7th largest economy in the entire world, but they're saying it's worse than feared. Now, I'd written about this around the turn of the year, and at that time, Goldman Sachs was saying that what was happening in Brazil was actually a depression. But now it's gotten even worse. With each passing quarter, the economic contraction in Brazil keeps getting worse. If you look at chart of it, each quarter it's shrinking more and more and more. And of course, now they want to potentially impeach the president over there. People are hurting. Unemployment is rising. Crime is rising. Things are getting out of control. But other areas of South America are even worse. If you look at Venezuela right now, in Venezuela, they've got shortages of food and basic supplies. The inflation rate is now over 700%. And basically, crime and rioting and looting are completely out of control. The mobsters and the gangs are just, running wild. So you want to use the term economic collapse. Well, there was an article in The Independent, which of course is one of the most important news sources over in the United Kingdom. This was the headline, quote, Venezuela is on the brink of complete economic collapse. So there's another mainstream source using that term economic collapse to describe what's happening in South America right now.
Wow. Yeah, so we've gone from Europe, seeing what's going on there, and then now South America, seeing what's going on there. Brazil, Venezuela. We know Argentina's been in lots of problems. I have family in Argentina that can't get money out of the bank, can't move money around. They're seeing hyperinflation or, just very high inflation, trying to move money into Bitcoin, doing all kinds of things. And it's major problems down there. And, Michael, we got more to talk about. We have China, the East. What's going on in Asia that continues to confirm the global economic collapse?
Yeah, we've talked about Europe, we've talked about South America, but what's going on over in Asia is very disturbing. You look at China, of course, they're the 2nd largest economy in the entire world. Well, you look at China, the stock market is already down more than 40% from the peak of the market. You look at their exports in February, Chinese exports were down more than 25% compared to a year earlier. That's a massive decline, and they've had a string of these declines month after month. This year, since the beginning of 2016, the China Containerized Freight Index has hit multiple all-time lows. So what, and of course, exporting and trade is so key to the Chinese economy, so critical to what they do, and yet we're seeing that shrink. And overall, their Chinese economic numbers are the worst we've seen since the last global recession. Now, of course, their headline GDP numbers, everyone knows they're manipulated, so they still appear to be positive, but they're lower than before. But of course, China is never going to actually come out and admit they're in a recession or even approaching recession. In fact, they haven't reported an official recession since like the 1970s. So but even the manipulated numbers they're reporting are the worst we've seen since the last global recession. So we've got big trouble in China. And just to hop across the water there to Japan, Japan is a mess. Their GDP is shrinking again. In fact, for 2 out of the last 3 quarters now, their GDP has declined, has shrunk. We just got a brand new industrial production number from Japan. It was the worst 1-month decline that we've seen since 2011. The tsunami, there was 1 month where, it was their numbers were really down because the tsunami just hit the country. Well, we just saw the worst numbers since then. And the Nikkei has been falling. In fact, if you look at the Nikkei, it's very, very interesting. We saw the great shaking that was in August, took the Nikkei down quite a bit. Then it bounced back, but not nearly as high as it was before. Then in December, the Nikkei started to fall again, very significantly, fell through December into January. And of course, the rest of the world started falling in January. Here in the US, there was financial markets were shaking. And so this took the Nikkei down even lower. Then it started to bounce back somewhat, but didn't get back to where it was, prior to that shaking. And now in recent days, it's, seen, it seems that like it's almost starting another leg down. At one point it was down another more than 1,000 points. Last night it bounced back slightly, but what we're seeing, it was like this giant leaning W if you look at a chart of the Nikkei. And my concern was that, we're starting to see another leg down. Well, usually whatever the Nikkei kind of leads U.S. markets often and the rest of the world. A lot of times financial turmoil or a shaking or a downturn of financial markets, a lot of times it'll start in Japan. So that's why I'm concerned about the new downturn that we've seen. Now, last night there was a bouncing back, so hopefully there's a stabilization there. But overall, in terms of all these downturns, the Nikkei is down about 5,000 points from where it was last summer, and so they've been having tremendous problems, issues, and in Japan they're so desperate to stimulate the economy, so they've thrown all this quantitative easing over there, and based on the size of their economy, the proportion. What they've done is far greater than what we've done here in the United States. I mean, their program would basically make the Federal Reserve blush because it's been so dramatic. Of course, they've gone to negative interest rates, but that really hasn't worked. And so now the government's saying, well, we might just start handing out gift certificates to young people to get them to spend money to try to stimulate the economy. I mean, it's just they're just so desperate right now.
Wow. Yeah, that is amazing, Michael, and to see how bad things are getting, and you make the case for how bad it is around the world and how it's all happening at the same time. I know we touched on it briefly, but I mean, give us the idea of what we are seeing here in the United States. You alluded to the fact that it's worse in Japan, but how bad is it here in the U.S.?
Well, yeah, in terms of the stock prices, people are feeling pretty good at the moment, but they're completely disconnected from economic reality. The latest projections from, for example, the Atlanta Fed is projecting that U.S. economic growth for the first quarter, the Atlanta Fed GDP Now model says that we're going to come in at 0.1% for economic growth for the first quarter. JP Morgan is forecasting that it's going to be 0.2%. So this is just barely above contraction is what they're projecting. And these projections have been tracking lower and lower and lower with each passing week. So by the time the numbers actually come out, we could very easily be in the negative in terms of a contraction for the first quarter of 2016. But we've seen, all kinds of things. We've seen factory orders here in the United States decline for 16 months in a row. We never see this outside of a recession, where it's not just 1 month or 2 months or a few months, but for 16 months in a row, factory orders have been contracting. We've got the inventory to sales ratio has just exploded to the highest level since the last recession, as the inventories are piling up. Businesses are sitting on all this stuff that's unsold. We're seeing corporate debt defaults have now skyrocketed to the highest level since the last financial crisis. The average rating on U.S. corporate debt has fallen to BB, and it's actually lower now than it was at any point during the last financial crisis. So, and of course, we're seeing corporate revenues fall, corporate profits fall. So all of this, all these things that we would expect to see either just prior to a recession or as a recession began are happening right now. And all these warning signs, but people say, oh, the Dow is up again today. The crisis must be over. Everything's fine. And yet all the economic fundamentals just continue to get even worse.
Michael, I couldn't agree with you more. What are you preparing for? What are you suggesting people to do here in 2016, and your overall advice for people to get through it, to prosper, and to thrive here in this current environment?
Yeah, well, what I like to do is take people back to 2008 and 2009. There's different strategies that are required to get through a period of crisis, even if it's just a recession, but especially if it, escalates into kind of a full-blown historic financial crisis like we saw in 2008, 2009. Different strategies are required. When things, and for example, right now, if people have money in the stock market or in the financial markets, they might want to evaluate what their risk is, because if things start crashing, are they going to be okay? Are they going to be able to survive if their investments crash really hard? Mm-hmm. Wow. Like we've seen in past crashes, whether it's 40, 50% decline, can you weather that? Can you survive that? And of course, a lot of people are moving into gold and silver, precious metals, as a way to insulate themselves, protect their wealth during a time of crisis. And of course, not everyone's in the markets. On a more practical level, one thing that I really recommend to people is to have an emergency fund that can cover at least 6 months of expenses in the case that you lose your job, there's a business reversal, anything. And this is a good idea in any time, but especially during a time of crisis. You just look back at 2008, all of a sudden, there was a huge downturn. Millions of people lost their jobs because, when there's a downturn like this, you'll notice that fewer people are coming in. And when they come in, they have less money to spend. And so, we're already seeing corporate revenues fall, corporate profits fall. And when that happens, businesses start to lay off people. And just like we saw in 2008, starting to happen. In fact, according to Challenger, Gray, and Christmas, the job cut announcements by major firms in the United States were up 32% during the first quarter of 2016 compared to the first quarter of 2015. So we're already starting to see it happen. People are going to lose their jobs. And because, more than 60% of all Americans are living paycheck to paycheck, when people lose their jobs, they don't have anything to fall back on. So they can't pay the mortgage, they can't pay the bills. And, then we start seeing people lose their homes, foreclosures go up. People go from living a comfortable middle-class lifestyle to being out on the street very, very rapidly. Right. So you got to have that cushion. You got to have that emergency fund. It's something I very, very strongly recommend for people to do. Now, in the longer term, my wife and I are preppers. We do believe in storing up food and basic supplies. We don't think we're going to need them next week or next month or even in the short-term time frame. But mid and longer term, we do believe that some of these things in terms of prepping. We do believe those things will start to come into play, not in the short term, but in the mid, especially in the longer term, as we believe that we are heading into a crisis that's ultimately going to be greater than what we saw in 2008 and 2009 by the time it's all said and done. Now, right now, we're just in the early chapters. We're just seeing the early shaking. But as it all plays out, we believe that we're going to see essentially a total meltdown. And so, if you, for example, if someday you can't go to the bank and there's a banking holiday or there's some disruption with your bank and you can't get money out of the ATM, what are you going to do? That's one of the reasons why we recommend don't have all of your eggs in one basket. Spread your assets around to different banks, different types of investments, whether it's precious metals or different hard assets, and just have your assets spread around different places. It makes it harder for, if there's an emergency, if there's a crisis, for you to be in a situation of hardship because you can't get access to what you need.
Sure. Yeah, you're absolutely right. And I couldn't agree with you more. And I kind of go back to that old little phrase that people repeat. It's kind of a cliche, but it's a recession when your neighbor loses their job. It's a depression when you lose your job. And the collapse is going to get very real for people, which it probably already has for a lot of people. When people start losing their own money, they lose their job, and things kind of start unraveling for them. You can't pay your bills, things get more expensive. That is the middle of a collapse, and that could be as devastating for anybody in the moment, a really bad situation. So, starting to think about these things and preparing for this now is a great idea, and I really like your thoughts on having an emergency fund and your preparation for that. Michael, just a thought here, and I'm curious. Let's say we were able to go down 200 years from now and look back at the collapse that we are seeing right now. Are they going to say there was a global reset and the economy recovered because of a reset? Or is it going to be just an ongoing repackaging of the collapse, ongoing debt expansion? I mean, is there any indication as to what is likely to happen over the next 20 to 30 years for us to get out of this global collapse situation?
Yeah, I think for the longer term, I tend to have a more apocalyptic view than most people who write about these things, in that I believe we're in the terminal phase of the greatest debt bubble in all of human history. And for decades, I mean, people think this is normal life, but for decades, we've been able to consume far more than we produce. We've been able to live this massively inflated standard of living because of debt, not just government debt. Of course, government debt, just prior, when Barack Obama stepped into office, it was $10.6 trillion. Now we're above $19 trillion, with the debt of the federal government. But of course, we've got, the debt of state governments, local government. Then, corporate debt has exploded to ridiculous levels, and corporate debt defaults, as I mentioned earlier, they're already risen to the highest level since the last financial crisis. Corporations are just drowning in debt. And then, of course, consumer debt, credit card debt's approaching $1 trillion, student loan debt's over $1 trillion, consumers, we had a little bit of deleveraging immediately following the last crisis, but now, the debt of U.S. households is, it keeps hitting new all-time record highs. In fact, in the fourth quarter of last year, 2015, U.S. consumers added more new credit card debt than they did during the years of 2009, 2010, and 2011 combined. All 3 years, for the entire years combined, wow. We added more new credit card debt during the last quarter of last year. So we haven't learned our lessons. We instead, instead of fixing our fundamental problems last time around, we just papered them over, got into even more debt. We keep doing, and we just trying to patch together the current system. So the crisis that happened last time around, I think it was just kind of a warning signal of what would happen if we didn't fix our problems. And of course, we didn't fix them. So I believe what's coming is going to fundamentally alter and permanently alter our standard of living, because this thing where we're able to borrow all this money super cheaply and fuel our debt, this ridiculous debt fueled standard of living, it's not sustainable. It never was going to be sustainable. And so I believe there's going to be a permanent massive adjustment, and the dislocation of and the loss of faith in the current system. And as it basically unravels and implodes, I think we're going to see economic pain on a scale that is historic, like we've never seen before. So no, I don't think they're going to be able to fix it or patch it up. When this thing finally blows, it's going to be historic. It's going to basically bring the entire existing system down. And, so in the long term, it's one of the reasons my wife and I, we store up emergency food supplies, those type of things, because we believe that the current system is not just going to kind of have a rough patch, but is basically going to completely fail and implode. It is our perspective.
Michael, you got a new book out. If you wouldn't mind, please give us a little idea of what people can expect if they were to purchase and read your new book.
Yeah, you mentioned The Beginning of the End earlier. That was a novel, actually. I wrote it back in 2013, which kind of tries to give people a picture through, because it's a novel, it's a story, but it's got a lot of truth in it, and giving people a picture of, okay, as economic collapse starts to unfold, as things, start to get crazy in this nation, what will that look like? And so it's a mystery/thriller, and it's very exciting, but it communicate truth to people at the same time. Now, I also have a brand new book. It's only been out about 2 weeks, but it's available on Amazon.com in paperback and in Kindle, and it's entitled The Rapture Verdict, and it's all about Bible prophecy. And I know that's probably something you don't usually talk about on your show, but it's something I have a fascination with. And most people in the United States identified themselves as Christians, and they're curious about what the Bible has to say about the last days or the end times, which I believe we're moving into. But I take a very, very different perspective from what most churches, and particularly evangelical churches in America, are teaching about. They believe that there's this rapture which is coming before anything bad happens, so all the Christians are going to get pulled out of here and everyone else is going to have to suffer. Well, I show very clearly that the Bible shows that that's not going to happen, that Christians are going to be here through it all too. And so it's a highly controversial book. I believe it's going to be one of the most controversial Christian books of 2016. So if people are Christians, if they are curious about it, I encourage them to check it out.
Michael Snyder, everybody. Michael, thank you so much for coming on the show with me today. Again, everyone, his blog is theeconomiccollapseblog.com. Michael, again, thank you so much for coming and sharing your wisdom with us here at Future Money Trends.
Thank you so much. It was great to be with you.